Hedge fund managers are reportedly buying stocks of companies moving online, according to Reuters, despite lockdown relief. Good morning, it's Thursday, May 13, and this is The Breakdown. The U.S. government's deficit has hit $1.9 trillion. That's a 30% increase year on year, with expenditures at $4.1 trillion and tax income at $2.1. Tax taking is actually at record highs, thanks to larger receipts from wealthy people and large corporations. Sorry about that. What happened there? Yes. Equities continue south this spring day. The Russell really hurting last night and its companions bleeding heavily. Indices have been steadily falling for a week now, and the S&P suffering its worst day in 3 months, shedding 4% of its value. The culprit, of course, is that despite attempts to calm the concerns, investors are still worried by rising inflation and the dangers of the Fed finally hiking its rates. What we're looking at is an asset well below its moving average if we take a look at the NASDAQ, an RSI that refuses to budge from oversold, and a strongly negative MACD that's tried to cross above its signal, but not quite hard enough. We're not in a bear market yet, but with Wall Street continuing to ignore the fundamentals, who knows? Core consumer inflation in April hit 3% year on year with the, wait, I must have missed something. Yeah, core consumer inflation hit 3% year on year, with the month's CPIs rising a stunning 4.2%. That's a 12-year record. The 10-year bond yield hit 1.695% again, a 2-month record increase. Mortgage applications rose nicely by 2% amidst a 7-tick drop in 30-year rates, and real earnings doubled to 2% in April. Meanwhile, in an exclusive report, Reuters is telling us that the U.S. Fed is requiring banks to detail their risk mitigating measures for climate change-related risks, that's flood, fires, and other forms of natural mayhem. Later today, we'll be seeing PPIs, jobless claims, and ISM's business indicators. European benchmarks were up yesterday on rather decent earnings, and the pound is up on some positive data. Industrial production improved in the UK to 1.8% in March. Construction output was up 6%. The trade deficit grew to £11.7 billion, but that's not as bad as expected. And a preliminary reading of Q1's GDP shows an improvement to a 6% contraction, which is 1% better than the previous year. Unfortunately, that's still much worse quarter on quarter, which actually showed a 1.3% increase last quarter. And business investments are deteriorating, a 12% contraction in Q1. CPIs improved marginally in France and Germany, and industrial production in the EU missed the mark in March, climbing 10.9% year on year, rather than the expected 12%. The EU's Economic Commissioner yesterday said that member states are expected to return to pre-COVID conditions by the end of 2020, with GDP expected to increase 4.3% this year and 4.4% the next. Asian markets this morning are suffering U.S. inflation woes. New Zealand's Dow Jones down by nearly 3%, followed closely by the Nikkei, and then China. Not helping were less than spectacular fundamentals from China's banking industry and continuing tensions with the U.S. over its minorities treatment policies. China's, that is. In Japan, Bank Governor Haruhiko Kuroda said overnight that the economy was showing signs of improvement. He said no other country had implemented the same level of purchasing measures as his, and he wasn't stopping anytime soon. Another 500,000 barrels were shed this past week from EIA readings of oil inventories. That's after the API read 2.5 million the day before. Not as dramatic as last week's numbers, and oil continues down regardless. And Elon Musk has announced that his company will stop accepting bitcoins for cars, citing the environmental hazard posed by energy-quenching miners around the world. They pushed the token down by another 10%. We can see that here quite clearly on the hourly chart. On the daily chart, we see the asset sitting pretty at the 23% Fibonacci level, and although the RSI has turned positive for some reason, profit-taking maybe, the 38% level hangs threateningly close. And joining the crypto fray, Israel's central bank has found the time in between bouts of let me say that again. Israel's central bank has found the time in between bouts of cross-border barrages to declare it was releasing a draft model for its own digital currency. With earnings shifting focus towards Asia and Europe, yesterday saw an excellent 278 yen EPS for Toyota's Q1, based on revenues of 7.7 trillion yen. SoftBank provided a 7.4% increase in revenues to 5.6 trillion yen, and earnings grew positive to 24.37 yen per share. Deutsche Telekom disappointed with a 31.87 billion euro revenue count and a 30-cent EPS, as did Iberdrola at 12 billion and 64 cents respectively. On the Mets front, Bayer did well, soaring past expectations to 12.33 billion euros, as did Merck with 463. Today we have earnings from Alibaba and, appropriately, Disney, alongside Airbnb and newcomer Coinbase. This is their first quarterly report, and we bid them welcome. Let's just say that Alibaba constantly surprises to the upside, and Disney slightly less so, with 3 out of 4. And finally, Amazon's 250 euro back tax bill to Luxembourg has been annulled by an EU court, and the Japanese owners of 7-Eleven has been asked to restructure by an activist investor that pushed their shares up by over 7%. We can't leave without wishing well to Ellen Degeneres, who's taking her 19-year talk show down from the airwaves. Good luck in her upcoming endeavors. We'll be banking